Okay guys, just to show you a few trades that I did share. I know it's a big screenshot, but you can clearly see the levels. You can open these things and see how I found my confirmation on it. US30, I gave the stop loss and the target of the expected move. It's very much self-explanatory if you're looking at it from this way. And over here we can see NASDAQ, a very same setup. We did take trades and I'll go through it quickly. Okay, so if we're looking at NASDAQ, and this is how I identified the point of interest was as follows. So the theory is in any downtrend, so let me just do this cleanly. In any downtrend, it doesn't just go straight down. It goes up, goes down, goes up, goes down. And what I will call the theory is the institutions, the smart money, the institutional money, that they do is they tend to move price up first in order for it to retrace down. And then they move it up, and this is how they liquidate. So they want to create that impulse to induce people, and then they liquidate. And this is what happened in this trend over here. This is the piece of the puzzle we need to keep an eye on. So over here we can see this block here was where price found a bounce, and they wanted to trick people into buying over here because it looked like it scooped up, and now the next impulse will continue up. And what happened was they liquidated it down. So this upwards movement was created for the sell-off. And what happened over here, if we draw this box right to the right, price never came back and even fetched into this block. So it created a bit of a liquidity void. And if we drag this thing far to the right, we can see now that price has finally came back to fetch the remaining orders that were left over there. This is on the daily. Now if you reduce this block down and you want to find that perfect entry, it is a bit challenging, but the rule of thumb is the last bullish candle before it became bearish. So this level is still untested. Okay, there's potential, it can still come up here, we don't know. But this is the reaction we saw, and we are reactional traders. So this is the last bearish candle that it did not finish mitigating yet. So there's a high probability of it going down. So on a daily, if you have plenty of capital, that's your sell area right there in this box. And you could potentially say, let's go for the last bearish candle before it went up, and it looks like, so this is a huge trade, a 1 to 5, but obviously we want to trade a bit shorter term than on a daily chart because you're going to wait very long for this trade. It can happen, but let's scale it down and refine this entry more. So now when we get to the 4-hour, it touched our level, and we can see that if we just remove it, that price never got tested again. It created a huge imbalance. This is a very strong move to the upside. So this is where I say institutional money got involved and they manipulated the price in order to fetch the order. So it got close to this order block. They pushed the price up, and this is how they faked us out. If you look at the 1 hour, they pushed the price up and it looked like it created a double top before this section happened. Forget about this block over there, forget about that one for now. They pushed the price up and it looks like they created a bit of a support resistance type of thing here. Now we're going to break this resistance there, and this is how they faked us out. And the method that I want to implement with this is a simple thing, is just to identify a trend with a trend break. So here's our trend we identified. So you want to look at the lows and you connect the lows. It's very simple. And once you get a break of a trend, it tends to break and retest and continue down. So this is nothing secret. So this is the 4 hour. If you're looking on a zoomed in on the 4 hour as well, I did initially have a trend going here, something like this. It broke trend and it came back for a very late retest on the trend method. But there's not enough touches there. But if I connect these lows over here, and you'll see it on the 1 hour, you can see it much clearer. And this is what I shared on the server first, is this trend line that got created. And generally, once it breaks and it retests and it starts rejecting, that is a very strong indication that price has reversed. Any break of trend and retest generally gives me about a 1 to 5. This happens to be a 1 to 6 trade because I'm aiming for this last order block that is sitting here. So this is a very good risk reward ratio, 1 to 6. You can refine it down to 1 to 10 if you want to. You could have argued and said, okay, I want it on this trend, and you can refine your trend very nicely. And it looked like it was faking out, but this rejection showed me here already. The more you zoom in, how it started rejecting. So I did get into early sells, which I scalped on this break of trend over here. But generally when I see this type of movement, I'm also scared of a break of a trend to the upside again. It was possible. So over here I got a bit nervous. I thought let's stay out. But when I saw this change of character on these lows, especially when it started breaking and you can start highlighting your lows, you will see that the price structure has changed. These lows got broken and retested. The trend got broken and retested. So here we got two confluences already. For it to continue down to this huge gap in price. You can see there's just bull candles here all the way. There's no bearish candles. So there's no orders here that really it can bounce from. So that's created a huge amount of points for us to score. So now we're aiming for 2,000 points, which it clearly smashed. So this is just a recap on that. US30, very similar situation. I also used trends. And this was the thinking, connecting the lows. I was entering a swing last week over here. It tapped these levels, it continued down, broke this low. So this is your break of structure over there. Just fetch this liquidity over there. And as well as confluence you can use as well, like from the high to the low. So from this high to this low, it tends to go to your 61.8. If you go from that high to, let's say, so from that high to this low, 61.8 zone, very active of this, and I can carry on like that for refinement. And it keeps going to these fib levels, and you can go from high to low continuously like that to find entries. But in general, I use the trends and I identify gaps in price that it needs to fill. So potentially here, it can still break it, but this is the point of interest for us. And if we go down to the 1 hour, you can refine it even further. So that's just a quick recap of the trades, nothing fancy. If you want to find out a bit more and work on a strategy like this, even for buys, you can do the same thing. So with potential buys, you can just look at something like that. High to lows, you will see that once price breaks a trend, it always comes back to retest. And your last, and it didn't actually do it over here. There's a bit of a gap. But you can potentially take buys once it breaks a trend, but you must know it's going to come retest and continue up. But this is not a good place for buys because we are actually still very bearish. We could see massive rejection coming from the higher time frames. So it's important to keep your higher time frame in mind when looking for sells.